Welcome to Market Weekly Update with Ton Kitten, starting with gold prices. Gold prices form a barred fax-like pattern. Trading below 26.31 USD Oz confirms barred fax. Resistance at 27.18, support at 25.50 USD Oz. Trade gold cautiously. Next, the Nasdaq update. It follows our discussed perspective. Nasdaq hit an all-time high. Investors must stay vigilant. Core Nasdaq chart shows tight valuations. Buffett indicator compares GDP size to market. The upper resistance is at 27.18 and the lower resistance, if it falls below, will be at 25.50 US dollars per troy ounce. Anyone who trades gold should be a little careful. The Buffett indicator compares GDP size to market size, currently around 208%. This indicates the market is expensive, over double GDP. It's at 2 standard deviations. Often, when the market spikes here, a sharp correction follows. We expect this early next year, around February. For Nasdaq investors without a low-cost basis, we recommend reducing your portfolio. For those short selling or betting on a downturn, prepare now. Right now, the market is at around 208%, which means it's quite expensive, more than double the real GDP. Now, looking back at the Nasdaq, it's currently running at 2 standard deviations, many times. When the market spikes up to this level, we often see a sharp correction. We expect this to happen early next year, around February. So, for those who are investing in the Nasdaq stock market and don't have a really low-cost basis, we recommend reducing your investment portfolio. For those looking to short sell or bet on a downturn, it's time to prepare. In the Nasdaq stock market, if you don't have a really low-cost basis, we recommend reducing your investment portfolio. For those looking to short sell or bet on a downturn, it's time to get ready. The US dollar remains stable, moving sideways near 106.2. This aligns with our prediction post-election, and it will trend sideways, possibly down. Resistance is at 106.2 to 107. Support is at 99.8. Moving on to this week, the market will focus on the Fed's interest rate policy. FedWatch predicts a 75-80% chance the Fed will cut rates by 0.25% from 4.5% to 4.25%. Below is 99.8. Now let's see what we'll meet this week. The market will return to paying attention to the interest rate policy of the US Federal Reserve or the Federal Reserve once again. The market predicts from the FedWatch True that there is a 75 to 80% chance that the US Federal Reserve will decide to reduce interest rates by another 0.25%, from 4.5% down to 4.25%. And this is the weekly market update with IFG.com. I'm Ton Kitty, wishing all investors happiness and profitability as we approach the end of 2024. See you in 2025.